All right, ladies and gentlemen, I hope you had a wonderful day. Meta beat earnings after hours and somehow raised and lowered expenses. But the main story today was Jerome Powell raising rates and practically saying the same thing. Now, there was a little bit of changes today. I'm going to go over all of them. It's simple, but not simple, and kind of dumb because it all boils down to a couple of different words, but the whole idea of being data dependent, that hasn't changed. So maybe we get a little bit more volatility on the data events, and we do have the PCE this week. I'm going to go over that calendar, but overall now, we've smoothed some things out with Powell out the way. We're going to wrap up the earnings next week, enter into August, have two more data sets like Powell said, hear from him in the middle, and really it seems like September is where all of the action should be. So I'm going to go over that. I got a couple of plays. We even hit that TDOC today. It did a lot better than we expected, so that was nice, but I got a couple more plays that I'm going to go over, and then we're going to talk about the rest of the week and where we go from here. So Chad, drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We had Powell live. You still have earnings tomorrow, so hopefully we see you there, and I guess that's where we're going to start. There was a lot of earnings today, and obviously we were focusing on Meta, but Chipotle, I think they did a little bit better than expected, but they ended up going lower. I didn't look into PTC or ServiceNow. Lam Research killed it. Enovix, they did a little bit less than expected in terms of loss, but they had one part that was bad about it. eBay, I thought they did good, but then they got sold off, and then I have not looked into Mattel and the other ones. These were just today, but what I want to bring up is tomorrow. These ones, you could look them all up right now and see, and there will be a reaction tomorrow, but now in the morning, we're getting McDonald's, Abivai, Royal Caribbean, Southwest, MasterCard, Honeywell, and then what's that? What bank is that? New York Community Bank. Are they even public still? Oh, yeah, they're the ones who bought Signature, but you have that pre-market, then Ford, Intel, Enphase, Dexcom, T-Mobile after hours. We are still going to have a setup, so keep that in mind. But now, what happened with Mr. Powell? Obviously, he raised rates, but before we talk about anything, I have to take you back in history a little bit, and we are starting right here. If you remember in May, we were talking about a change on this statement. I was making watch lists and I was telling you how these little words, if they change, that could be an indication that we are getting closer to a pause. Not only just that, but why it was such a big deal, because the statement of the FOMC, it has remained the same for several months. I think it was like 8 months in a row, 9 months in a row before they changed this in May. So you should remember this phrase. It said the committee will closely monitor incoming information and assess the implications for monetary policy. By getting that, that was the phrase that we said, hey, change in statement means they might be ready to pause. Then what happened at the next meeting in June? You had the follow-up, and then they added to the statement, and that is where they announced they were going to stop raising rates at that June meeting, and they said we are holding the target range steady at this meeting, and it allows the committee to assess additional information and its implications for monetary policy. So if you remember, we were analyzing the statements to figure out what was going to happen. This was all the way back from like April and May when it first started to arise. And like I told you, the May statement was when everything started to change. At the latest pause, we got another change, and now today, we saw one more minor change, but this was the only big change we got besides some comments towards labor, which were positive in the statement. But today they said the committee will continue to assess additional information and its implications for monetary policy. That was the statement we got today. Is it the same statement as before? No. But does it sound the same? Yes. So what changed between May, June, and today? And why is this so important? I will give you 10 at the end of it, but in general, everybody is watching for these statements to guide us into a pause or not, because in May, it worked. So in May, when they did make the first change, at the next meeting, you got the pause. Once they changed that language, they said holding the target range and assessing, that's where we got our pause. And now today, what you should notice is that they took out the holding the target range, and both of them, pretty much all of them, start from the committee. So today they said the committee will continue to assess. In June, they said the committee continues to assess additional information. And then in May, they said the committee will closely monitor incoming information. So like I told you, it's very minor, and maybe Powell did it again, but they pretty much combined the two, and the key word that I caught out of all of it was pretty much monitor or assess, and that leads into the next thing now, because everyone's saying this is going to be a live meeting. So although this was the only change, and I'm stressing on these words, why am I starting with that? Because nothing else happened, and Powell pretty much said the same thing. The market reacted positively, hearing Powell say, yeah, if the next two data sets come in with the same trends of inflation, he is down to hold rates where they are. But he also said, again, like every meeting, if it comes in hotter, then he will be able to raise rates. Through all of these two data sets, the assumption everybody was getting is that next meeting in September is live, and pretty much however these next two data sets, it's either going to lead to another rate hike, or we will really in fact get that pause and then play this game all over again. But regardless of how people are thinking about the future, and we'll talk about that with the bonds, you had a positive reaction because people wanted to hear that. Remember, the big assumption of today's meeting was we would get a rate hike, but this will be the final one of the cycle. And that's why I'm saying now these next 2 months will be critical, because it looks like this is the red zone now. August, September, you have an 8-week delay between now and the Fed, not a 6-week delay. It's starting to heat up here, and this might be where action happens, and we really find out, is 2024 going to be good, or is it going to be till 2025? That's where Powell was saying some stuff that we misinterpreted. A lot of people did at the moment, or they were just scratching their head. He might have added a delay, but the main point is now the real action happens in the next data sets, and then coming to the real September meeting. And like I said, Jackson Hole is going to be at like the end of August. That's going to be our halfway point where Powell will be able to check in and confirm or deny. But overall, I don't think anything changed. It's still putting us in this holding pattern. Powell is getting and keeping his optionality, and whether he knows or doesn't know, he's ready to pause, but not really ready to pause. And that's the step we're going to have to wait for. But I think we're going to get a lot of answers from there. And now in the meantime, it's going to be about those data sets. My theory is maybe they become a little bit more important. That's what we started seeing at the end of last year when Powell started hyping up these events. But so far, until there's any real change or data, I don't think that's going to happen. So we got to see. But now, what I mean not going to happen is in the sense, I don't think it'll be as crazy volatile until we start getting huge data surprises. So there is the ECB tomorrow morning. That's going to be the next thing to watch, and that will be able to move the bonds, because again, if people get the same attitude that the ECB is going to raise and maybe one more and they're done, you might get this whole global pause thing, and then it'll get followed up with the Bank of Japan finally starting their tightening, but they're not going to. They're just going to maybe change the inflation target. So that's Thursday, Friday. That's on the global scale. But now for the calendar, what you're going to be getting tomorrow, we got GDP, durable goods, wholesale inventories, initial jobless claims, core PCE quarter over quarter. The real PCE is going to be on Friday. That's the main event. But then you're going to get pending home sales. Some of the new home sales data came in lower today, but this will be stuff to move it. And now that we could potentially be on the precipice of the real pause or not, we want to see if this data really starts moving us. And then, like I'm telling you, Friday PCE, that's going to be the big one. And then after that, the reality, unless the small data brings out more volatility, it's going to just be about the non-farms. Then it's going to be about the CPI, Jackson Hole, then the final Powell. And then in the next week, you got the final big earnings. So now, let us get into the plays. So right off the bat, we have a couple of different plays. The TDOC was amazing, and I'll tell you what I did with that. Even my metas too. Remember the pre-earnings run-up plays? These suck so far. Again, we lost on the Google one right away, and I took the loss. I took the loss yesterday on the Microsoft one. Oh, wait, I confused the two. Google went up and then came down. We still took a loss. Microsoft, we just lost from the get-go. But both of those pre-earnings plays, they had gains for a little bit. Then we lost it. Same thing with Meta. We were going over what happened with this contract. We did have a gain, and then it just slipped away. So I took an $80 loss. I ended up holding two of them just in case I wanted to hold the $60 play. But those are overall clapped. But what other plays I made today, and the ones I'm talking about today, we're going to talk Disney and AMD. So I have Disney. No, we got to talk about AMD first because Intel earnings are tomorrow. This could be a sympathy. I even closed out my Intel because I bought the AMD after Microsoft yesterday, and I did want to keep adding to this play. So I figured if Intel's coming up, I could take whatever little gain I had. I had 60. We had almost $200 yesterday. I closed out of that, and then I started adding to the AMD, but I'm pretty much going to hold this into around next week because that's when AMD is going to have their earnings. So now we'll have a little bit of time leading into that, and a lot of people were just asking me, why did I buy it at this price? So this is what I'm saying. This is the pre-earnings run-up play that's expensive. This is the hype play if you want to go for it because it's not cheap. I mean, it was just at $80, I believe, around like 2 earnings ago when we were trading it, or I think even last earnings. No, it was literally at $83. It's up here at like 110. I think my average is around 112. I have about 200 shares. I bought another set today. But why I like that price, I flipped some of these other prices throughout all the NVIDIA stuff, but when I played that earnings, this was NVIDIA earnings. I got AMD as a sympathy. It was around 110 when I played it. So I like that price. It had a decent amount of upside. I mean, almost like $30 or $20 of upside leading into the earnings. So if things go good, I like it, but I think it's still risky. It could probably drop, I don't know, maybe even down to $98. So that's like another 10 bucks, maybe even 12, but I think it'll be a good one. High risk, high hype, and just overall momentum. And then we'll see what happens with Intel and the rest of those chip makers. So that's the hype one. But now the other one, Disney, this isn't long term. I'm playing this one for earnings as well. The only bad part about this one is that they report August 8th. So it's like 2 extra weeks. I was hoping it would have got a better reaction from Netflix, but it didn't. But overall, it's just been going down. And I played this on the last pre-earnings. It was a little bit shaky, but overall, I like it. I think the price, I'm in at 300 shares at like 86.57, I think, between now or leading up to earnings. It's going to have one of these pop days, and I think I'll be able to flip it out. So this one short term, still believe in it long term. I'm probably not going to add to the long term on Disney until after the earnings, and we see what's popping with it. But that's the first play that I'm going to be looking for. The second play now, I want to watch Google. Meta somehow did good, and I would want to make a play. It really depends on the premiums. I think Meta is already going crazy. Google was already stronger from last year, but again, Meta's breaking out. Google, not so much. It doesn't look like we have weakness in the whole ad space, even after Meta. Snapchat, I was saying, it wasn't that bad. Snapchat was bad. Again, they sold off. They even had a little bit of a recovery, but what I mean is that if you were looking at Snapchat to say there's weakness in ads, no, that was a company problem. And now after Meta, it looks like the ad stuff is at least stabilizing. Meta, Google, things aren't bad. The AI stuff, nothing's been threatened. People are liking that. So maybe here for Friday, I'm going to keep watching how Google played. It just had the first pop and then chilled out. If things get hype or if things sell off, watch how Google performs. I really think this could be an interesting one. And like we said, kind of lagging behind Meta, NVIDIA, and a couple of the other ones, Apple, Microsoft, that have already broken out and gone crazy. So watch out for that. That is play number 2. And then finally, good old TDOC, baby. So this was the play from yesterday. It did a lot better than I expected. I wasn't expecting gains, and like I was telling you yesterday, even like the upstart play, they eventually came down to break even. So that may still happen, but what I did here in this case, since I had 50 of these contracts, I sold 25 of them out at around 72 or 73 cents. It was just under 100%, got most of my money back, and now I got 25 contracts, and now we could ride this for free. I'm tempted to take the money now because it's still worth a lot, but we were talking about leap plays or plays with time and these runners and the metas. So realistically, you could hold this till the end of the year. If you think things will go crazy, this will be your play that goes nuts or not. So I really like it. Now, if you make it free, I even sold the 180s or the 80s that were out of the money. I got 100% on that one a little earlier. So took out of that one and just going to ride these out. It's going to be tempting, and use it however you please. But I've reduced my risk, and now I have the optionality to use this as like my upside crazy hedge, or we'll fit it into whatever. But that's where we're at with it. I like the move. If it does come back to break even, just keep that in mind on some of these. Some of you should put this on your watch list. You don't need to FOMO and chase it. Wait till it comes down, because that's usually what happens. Is even if they do continue to go crazy, there is a point where they do come down for a little bit. So we'll see what happens, but that is play number 3. I think I already told you everything else I got out of the Intels there. Grab some more Disney and AMD. That's what I'm going to be riding out. I'm still in that ENZ. It's a little bit up. Even BSGM's getting killed. I was going to average on that, but I'm waiting a little bit. Why is Baba going up here after I thought it was going crazy? But we're going to take in the data. Going to be riding a lot of these pre-earnings plays. We haven't made a post-earnings play, so I think now after all this, maybe Thursday, Friday, we're able to open up that opportunity. So I'm going to keep my eye out for some of those tomorrow, and then we'll see where it all takes us, see if the bonds react to Powell. I didn't even talk about that, but that's the thing. There's 2 things going on. If there really is going to be a pause, I think bonds will react a lot more on the data. The bonds held up way too good today, aka yields go down. That is this chart going up. That's what I mean by bonds going up, is yields going down. Bullish bonds, by going up, I mean bullish. But the thing about it, some people are trying to blame this on flows because there wasn't anything new from Powell, but the bonds kind of moved like there was. But like I've also been telling you, you don't have to overread it till you really break out of this range from the last time. I think this was kind of an outlier. We'll see, but up or down, keep that in mind from that recent range. And then even for the 2-year, that's like the 5% to like the 4.5%. So we will see what happens. But Chattadonia, that's your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, if the no enemy within, the enemy outside can't hurt you. And I'll just tell you, some enemies knock and some enemies sneak in. Some friends knock and some friends knock. I'm just saying, So, Chad, I'm going to leave it right there. You're ready. We got to make it through earnings, Powell. It may sound like he's a warlock wizard, but he's buying you time, and we now have a couple of months, and it might get crazy, but either way, you got to have the long term and 10% throughout. So, Chad, I love you. This is too much fun. So, God bless you. I'll see you in the morning, and that's it. Loading up my F-350. I don't drive up in EV. This is how I sing it, I have to like hold I don't have a belt on, but I go like this. If you don't know about my country, it's on the way. So I gotta sing it like this. Is this okay? I'm gonna leave, man. Horn.